Like, you don't just only buy poor people's land like you would imagine. You would think, oh, all these people need money. There's been a handful that have been so well off, they just want to liquidate and get rid of it. One property, they were opening up a coffee shop. They were well off. Not only is it going to be a slow transaction if they use a realtor, it just starts digging in your margins. And sometimes on those smaller properties, the math really makes sense for these people to go with the quicker option. A lot of the things we hear, they're just sick of paying the taxes. They don't need it. They live out of state. They're in rough financial times. Typically, if they're struggling, their rent's the number one thing they're struggling with.
It is the absolute last thing someone wants to do is sell their house. People get put in tough situations. They get a letter from us offering cash for a piece of land that they never have seen, or they've never been to, or they haven't been to in 10 years, or they just don't need.
Hey everyone, welcome back to the Real Estate Investing Podcast. Today's topic, we're discussing why sellers are willing to sell their land at 40% of market value. I'm your host, Ron Apke, joined again by my brother and business partner, Ron Apke. And this is one of the most common questions we get in land investing is just, when we're on the phone with potential students at Land Investing Online, their number one thing is why are people willing to take an offer of 50%, 40% of what their land is worth? But not only that, when I'm talking to people who don't know the business model from the outside, friends, family, relatives, whatever, they ask that as well. They just don't understand why someone would want to do that. And in this episode, we're going to uncover the motivation and why sellers work with us. But more importantly, after the sellers work with us, why they give us 5-star reviews and they say, I would work with them, I recommend it working, they refer people, things like that as well.
That's a good point, because going to the back end, we never get sellers coming back complaining about their experience. If you make it a good seller's experience, and like you said, it is the number one cause probably for skepticism, right? As far as it just doesn't make sense to a lot of people. And that's why we're going to get in this. We're going to talk about all the reasons why a seller would do this, and we'll go from there.
Exactly. And there's multiple layers of sellers' motivations. There's people, if you classify them 1, 2, and 3, 1 is, they've thought about it, selling it. They don't really know, maybe in the future. 2 is, okay, I'm in the middle. I could go either way right now. Probably leaning more towards selling it in the more near future. And then 3 is I'm ready to rock and roll. Let's get this going. I want this money. And when we break those down, 1 is more of a long-term drip. You can maybe convert them over time, figure out why they're thinking maybe they will sell it. It's in the back of their head, how often they use it. You can dig in and gauge that motivation. 2, a lot of times, that's where a lot of the money's made in the 2s, Ron. 2 is where they can go either way. Mm-hmm. And with the right sales and negotiation and everything in place, you can hopefully swing them. That's where, you can add your pipeline 2 deals a month to 3 deals a month just from that 1 extra and really take it to the next level. And 3s are the deals you send a blind offer. Someone with a D- sales background can still get because they just want that money and ready to go.
That's a good way to put it. I like how you put that. 100% agree. Those middle people, those people who some people would close and some people wouldn't close, that is what makes people's businesses. That's what can turn your 6-figure business into a 7-figure business, is being able to close the sellers that are a little skeptical on, because sellers can be skeptical when they come in as well. And closing them, being able, not convince, I don't want to say convince, but just closing them, building that trust with them is where the real money's made in this business.
Yeah, exactly. And the first thing we want to talk about is the seller's needs. Why are they selling? And I don't want to talk about their motivation and why land is such a good asset for them to sell. We're going to get to that next. But first, we're just going to talk about the seller's needs and the reasons that we hear when on the phone with them, why they want the money.
Yeah, financial times being tough, them just needing money fast. I think that's the number one thing, being able to have land, which isn't a very liquid asset, become liquid money for them is enticing for sure. Tough times, situational things is probably one of the more common things we hear from sellers. It's just a situation that comes up. They need money fast. They don't want to pay the taxes on the land anymore, whatever that is. That's what I hear the most of. It's when you try to draw out the closings to be 6-month closings or something like that. That's when a seller loses motivation really fast, because their need for money fast, that's not money fast and it's questionable, and then they fall off.
And we're going to talk about that option too when you start planning that 90-day closes and stuff, because there is room in the market for that, and specific sellers, whether they're 1, 2, and 3, and how you can maybe get them to sway. You can use some of those other tactics. So yeah, a lot of the things we hear, they're just sick of paying the taxes. They don't need it. They live out of state. They're in rough financial times, whatever that is. Like they owe their mortgage bill. The number one expense someone has is their rent. So when you look at someone and you're trying to uncover their financial needs, typically if they're struggling, their rent's the number one thing they're struggling with. So typically it's their mortgage to keep their house, foreclose on it, things like that they're concerned about. So that's probably the most common because rent is your number one expense in America and probably everywhere you live. That's just a fact. So going from there, Ron talked a little bit about the liquidity of land and how it's not too liquid and it takes time and you need a realtor and you put it up and it might take months and months to get a sale and then closing might fall out, which is very true. But another big point, and probably the biggest point, is when you look at someone's net worth and all the assets that they have under them. If they have their house, if they have their house that they're living in and their family's in, and then they need $50,000, but they have $50,000 of other assets like stocks and bonds and that type of stuff and land, which one are they going to sell first?
Land.
Yes, stocks, bonds, land, things like that,
Yep.
right? Whatever one they want more. But the house is almost the last asset that they're going to go to before, when times are tough. That's what they want to go to last because they absolutely, need shelter, need that. And if they can move out and downsize depending on their situation, yes, but they live there and they need that, right? Land is an asset where a lot of these people inherited it and a lot of them have never been there, or a lot of them bought it for intentional purposes to build or whatever it is and never got to it. And the motivation of land, this is why this business model works so well, is because it's such a strong asset class. People inherit it. People didn't spend much money on it. They got it a long time ago. It's 5x'd in price and they've never done anything with it. They barely go there. They thought they were. It was a cool thought to them and it never came to fruition. And it's just sitting there and they don't do anything and they're barely paying any tax on it. And it's just such a strong asset because they can liquidate that when they need that money. And they're going to do that before they sell their house.
Yeah, that's a good point. And yeah, I mean, people aren't going to, it is the absolute last thing someone wants to do is sell their house, sell their primary residence, whatever it is, because it's just not much option before that because you're going to have to put your money to live somewhere else in reality. So people get put in tough situations. They get a letter from us and offering cash for a piece of land that they never have seen or they've never been to or they haven't been to in 10 years or they just don't need. That's the difference. Like you need shelter. Houses, shelter. You need that. You need water. You need all that stuff. You don't need a piece of land 100 miles away from you to hunt on once a year, twice a year, whatever it is. So that's just the situation. That's where we can help these people out by helping liquidate this property, where hiring a realtor for a $30,000 piece of land is very difficult. It's not easy for them to go and sell a $30,000 piece of land themselves. And that's why we can do deals over and over again every single month.
Yeah, and it's fast money versus slow money. You hire a realtor, you do all that. We can close in 1 to 2 weeks. That's what we offer. You want to go hire a realtor, you're going to be, realtor's going to need to go out there, take a look, get you an opinion on what it's worth, post it, get it under contract, 45-day close on that. And you're looking at months and months. So if you have someone highly motivated, they want fast, really fast cash. And on the vice versa, like if someone needs money, they need it now.
Yep.
And we have people that go and look at other options all the time. We sold one property when I used to do our sales. I remember a lot of these motivations. One property, they were opening up a candy shop or something, or a coffee shop.
I don't remember what it was.
It was $135,000 property. Yeah, they're opening up brick and mortar. They were well off. Like you don't just only buy poor people's land like you would imagine. You would think, all these people need money. Some of them just don't want to deal with it, and there's been a handful of them that have been so well off. They just want to liquidate and get rid of it. They're whatever. They're retired. They have it good. They're living well. They have good financial stability. And the motivation, but it's all if they want it fast or slow. And then there's something in the middle there. There's where they want closer to market value, and they because you can't get close to market value and fast. You kind of you have fast and cheap, so you can get it low price per acre, low great price on it, and then you have slower and a little better price, or you have the slowest and max price, and it's kind of like a swinging core. They kind of both correlate together, if that makes sense.
Mm-hmm.
So the slower you take to typically get it, the more money you can get, because then you can post it with a realtor and do all that, and vice versa. You know, you can take a lower offer at 40, 50% and get your cash next week. And they're on the two opposite sides. But in the middle, there's something that we do called a double close. And if you guys have listened to us, you know what that is already. But it's where you just ask the seller for 90 days, find a buyer, line it up, get, you know, closer to market value for them, maybe 70%, 75%. Someone on the call last week said they did I think it was a 250 sell for 280.
Yeah, it was small.
It was small, but it's still
relative.
$25,000 deal.
Yep,
That's
yep.
our average flip profit margin. So those make sense. It's very small margin, not much room to work with. But when you have those type of sellers, in exchange for me going up on price to here, I'm going to need more time. It's like an exchange. So that's kind of the middle ground there that I want to shout, that the people typically aren't as highly motivated to get out absolutely now, but they're motivated to get out. Yep. They just have a little patience and can wait. And
you can get them a little more money, like you said. Like buying for, it's far from our average deal, even average double close, buying for 250, selling for 280. There's just not much margin in there.
Our typical margins would be for buy for 130 to 150, sell for 300-ish.
Yeah, but even with the double close, I'm saying, like, if I unless I thought I could sell it for 350 and I just like quick sold it for 280, if I'm buying something for 250, I want it to at least be 300 plus. Even with the double close, in my opinion, because things can go wrong so fast and you just have no margin.
You just don't have margin to drop the price.
Yeah.
But that's what happened to him. He had it listed higher and took a lower offer.
But yeah, double closing is an option for those mid-tier people. It's something you don't want to rely on immediately, because sometimes those people in the middle, you talked about number 1, 2, and 3, the people in the middle, those two people who are like somewhat motivated, you got to bring them on board. It does not just mean throw more money at them all the time.
No.
And sometimes people throw more money at them right away, get to the double closing thing, or they throw more money at it and they're like, oh crap, I can't find any funding for this because now the margin's too tight. Yep. Opposed to sticking to your number, selling what you're selling. You are selling fast cash. You're selling the ability to get that money fast. And some people go away from the value we bring. And like Dan said at the beginning, the customer feedback, the seller feedback we get is, I don't have negative feedback. I want to say 100% positive in terms of like the experience.
Yeah,
and like,
we collect back end. We used to do it more, but we would collect a lot of back end reviews.
We haven't had any bad reviews.
No.
Like 0 bad reviews from our sellers where we're buying for 40% of what their land is worth.
I have those. Yeah, I can prove those. The referrals that we get from those people too. Hey, my aunt and uncle want to sell a property. Can you talk to them?
Yep.
Like it's nonstop of that.
It means you're providing a service. Like when people are referring to other people, you're providing a meaningful service. And sometimes people look at it, we're buying for 40%. Like that's no service. It is a service because we're providing something that other people can't do.
Yeah, and you also, one thing to understand too, not only is it going to be a slow transaction if they use a realtor, then they're 10% down or 20. You know, if a realtor is selling a property for $25,000, he might have a minimum of $4,000 commission or something. Yep. That's very, very common, correct?
Yeah, 10%, or 3,000, 4,000 minimum,
4,000 or 10%. So that cuts in the price, and then you have closing fees on both sides. You know, say $1,200, that's $2,400 total, and it just starts digging in your margins. And you look at this, and you're like, okay, I can get 50% now, or you know, at the end of the day, this is going to be 74% after fees and everything, or whatever it ends up being. You can do the math, and sometimes on those smaller properties, the math really makes sense for these people to go with the quicker option.
Yeah, and the asset class, going on a little bit, Dan, is something else. Like the asset class of, people look at it because they compare it to houses all the time. Mm-hmm. The asset class of being able to buy land for 40% versus a house you're not going to buy for 40%, really ever. Maybe 40% of what it could be worth after a big renovation or something, but you're not going to buy for 40%. You're not going to get someone to move out of their house. Like it's such a simpler transaction with land, like you talked about at the beginning. No one's moving out of their house. Like they're just signing papers essentially and getting money for a piece of land that they visit X times a year or X times a decade, whatever it is. And that's what make the transaction is simple. And we try to do that. That's one of our selling points too, is making the transaction as simple as possible for the customer. Yeah,
exactly. And going off the 3 steps, just to reiterate what we said before. So the number one option, because we have double close and we have traditional. So get their money quick or ask for a longer time for more money, essentially. The number one thing you want to do is close the deal at the offer price you offer them, right? You want them to accept that. You know there's good margin there. You know you can buy it quick. You know you're going to make a ton of money. Number 2 is to negotiate. Maybe they didn't like that $25,000 offer. They want $31,000 or whatever. Meet somewhere in the middle, hold your ground, negotiate up, negotiate a quicker close, whatever it is. Use all the money's not the only thing to negotiate with, like Ron said. And then number 3, if they're not willing to negotiate, then go up and do a double close. And those are the steps of like what you want and what you want to grab and what you want to put the most emphasis on. First, get it at that offer price. That's where you'll make the most money by far. Number 2, negotiate to something that still makes sense to where you can close it still in a couple weeks and get that fast close, but maybe they wanted a little bit more money, but it still makes sense on both sides. And then number 3, the least desirable, but where there is still a lot of money, is a double close. And the reason that's not as desirable is 1, you lose out a lot of margin because you're going up so much. And number 2, the sellers are more likely to back out. You'll probably have 10 to 20% of sellers maybe back out, or maybe not 20's high, but maybe 10%. It just happens. I don't have a stat. I'm just making that up. But
with double closing?
Yes.
Yeah, you definitely, the longer, and from the day you talk to a seller to the day you close, the shorter the time period that is, the least likely, the less likely they are to back out. As
Correct.
that extends every single day, something can happen in their life. They can die, like anything can happen in their life, or they just change their mind and they try to back out and you try to sue them, whatever it is. But every day the closing extends, a lower percentage of chance. It might just be a 0.5% or something each day, less than that. But it definitely lowers. From all of our data we have, the shorter, the faster the close is, the higher likelihood of closing, without a doubt.
Yeah. Anywhere else you want to go with this?
I don't think so. It's just like you gotta gauge motivation, I think, and that is what drives this business. Like we talk to our members all the time. Like if you don't have a motivated seller, you don't have a deal.
And you can ask them that on the phone. How motivated are you to sell your land?
Why do you? Yeah.
Exactly. And that's like literally 1, 2, or 3, kind of like a listed out, and you can go from there. But as always, guys, please like and subscribe our YouTube channel. It really helps drive our mission forward. Thank you for joining, and we'll see you guys next episode.
Thanks, guys.
As always, thank you for joining. Please do us a huge favor and like and subscribe our YouTube channel and share this with a friend. It really means the world to Ron and I, but more importantly, it could help change the life of someone else. Thanks for joining, and we'll see you next episode.